Lululemon started out selling yoga clothes for women and somehow, over the years, turned into one of the biggest and most valuable clothing brands out there. Honestly, I still think the name Lululemon sounds a little silly, but the success behind it is no joke. It's easily one of the most impressive brand stories of the last few decades. The company's been making a profit every single year since 2005. Sales have gone up every year too. In 2024, they passed $10 billion in revenue for the first time and officially became a Fortune 500 company. That alone makes for an interesting story, but in my opinion, the most interesting part is what's happening right now. Because after more than 20 years of strong, stable growth, Lululemon is finally showing signs of trouble. The clearest place you can see it, their stock. Despite everything I've just said, Lululemon has lost more than half its value since the start of 2025. That's about $20 billion gone. Now, just to be clear, they're not about to go bankrupt or shut down, but a lot of people are starting to lose faith in where the company is headed. And honestly, it's not hard to see why. A few years ago, they promised to double their 2021 sales by 2026 to $12.5 billion. But now, that goal looks like a long shot. Sales in the US, their biggest market, have basically gone flat. And every time they report earnings, the numbers miss expectations. That leads to another drop in the stock. People are starting to think maybe Lululemon has already hit its peak. With more than 750 stores worldwide, maybe there's just not much room left to grow. Lululemon was founded in 1998 by Chip Wilson in Vancouver, Canada. The original store was part retail shop, part yoga studio, fitting since the brand was tied closely to the yoga scene. At the time, Wilson had just sold his previous company, a surf and snowboard clothing brand called West Beach. He got into yoga to improve his balance and noticed something right away. Most of the clothes people wore weren't stretchy or comfortable enough for the activity. With his background in apparel, he saw an opportunity. He created a line of stylish, high-quality clothing specifically for yoga, and it quickly got attention. He worked with local yoga teachers to fine-tune the products and promote them to their students. It helped that yoga itself was becoming more mainstream at the time. The brand grew alongside the trend. What started as a niche, almost cult-like following, eventually turned into broad mainstream appeal, just like yoga did. In 2005, Lululemon sold 48% of the company to private equity firms for about $100 million. That money helped fund new store openings. 2 years later, Lululemon went public, raising another $240 million through its IPO. Again, mostly to expand store count. The stock price more than tripled in the first few months of trading. Exposure on popular TV shows, like Desperate Housewives, boosted awareness and demand even more. The momentum was real, and the company kept riding it. For a long time, everything seemed to be going right.
The first and most straightforward reason behind Lululemon's recent struggles is the economy. It's exactly what you'd expect, plus a few extra complications. Rising interest rates and inflation have made a lot of people rethink their spending, and premium brands like Lululemon are often the first to feel it. When budgets tighten, shoppers look for cheaper alternatives. On top of that, recent tariffs have also hurt the company. It's estimated that these tariffs could reduce Lululemon's earnings by around $240 million. In response, the company's raised prices on some of its products, which could backfire by making the inflation issue even worse for their customers. Another challenge is that a previous exemption on imports under $800 has ended, adding more pressure to costs. When you put all of this together, Lululemon is now dealing with rising expenses that are mostly outside of its control, and that puts a direct hit on profits. And with investor confidence already slipping, it only adds to the uncertainty around where things are heading. Economic conditions like these can hit even strong brands hard, and in Lululemon's case, they're definitely a big part of the problem. It's not something the company caused, but it is something they have to figure out how to deal with, and so far, the solutions haven't made things much better.
The next reason for Lululemon's struggles is something very specific: buying Mirror. If that sounds confusing at first, here's a quick recap. Mirror was one of those at-home fitness products that got popular during the pandemic. It was a $1,500 wall-mounted screen that streamed live workout classes and personal training sessions through a paid subscription. The company behind it launched in 2018 and, not surprisingly, took off in 2020 when gyms were closed and everyone was exercising at home. That same year, Lululemon bought Mirror for $500 million. It was their first ever acquisition and easily their boldest move to diversify the business. By then, Lululemon had already expanded beyond yoga apparel into men's clothing and gear for all kinds of sports. Buying Mirror was meant to push even further into fitness tech, recurring revenue, and possibly new growth opportunities. But as gyms reopened and people went back to in-person workouts, Mirror couldn't keep up. In 2023, Lululemon took a $443 million impairment charge related to the deal, basically admitting that most of Mirror's value was gone. Later that same year, they signed a new partnership with Peloton. That move quietly marked the end of the Mirror experiment. It was a costly bet that didn't pay off, a lot of money and time went into something that quickly lost relevance, and now Lululemon is left dealing with the fallout.
Competition might be the single biggest reason behind Lululemon's recent struggles. Athleisure took off during the pandemic when people were stuck at home, and demand for it has stayed strong ever since. According to Lululemon's current CEO, the competitive landscape today looks very different than it did just 2 or 3 years ago, and it's hard to argue with that. A wave of premium athleisure brands has popped up, many of them gained straight after Lululemon's customers. Brands like Rhone and Aloe have gained attention, especially with celebrity associations like Kylie Jenner. A lot of them have been opening stores right next to Lululemon locations, hoping to pull people in. One of the biggest threats is Weary. It started in 2015 selling men's shorts and has grown fast, now valued at $5.5 billion. They announced plans to reach 100 stores by 2026, but they've already hit that target ahead of schedule. Then there's the pressure from lower-priced alternatives. With inflation pushing shoppers to save money, cheaper options are winning people over. Target launched its own athleisure brand, All in Motion, in 2020. It brought in over $1 billion in sales in its first year. And even Costco's in with the game. Their Kirkland activewear is so close in appearance to Lululemon products that Lululemon filed a lawsuit, claiming the designs were misleadingly similar and sold for around 10% of the price. They argued that in some cases, an ordinary shopper wouldn't be able to tell the difference. And honestly, some of the Kirkland items really do look a lot like what Lululemon sells. So while the overall market is bigger, it's also more crowded. And now, more than ever, Lululemon has to work harder just to stay ahead.
Another reason Lululemon may be slipping is that its products just aren't hitting the mark like they used to. To be clear, this isn't about saying their lineup is bad. It's not even about personal taste. But even the company seems to recognize that something's off. In 2024, their chief product officer left the company. She had played a major role in shaping Lululemon's product direction for 5 years, and many people saw her as a big part of what made the brand successful during that time. Her exit raised some eyebrows. Just a few months later, Lululemon pulled one of its key items, the breeze-through leggings, because customers didn't like the design. It wasn't flattering. On its own, that's a small issue, but it might point to a deeper problem. The company could be drifting out of sync with what customers actually want. Then in 2025, the CEO made a pretty blunt admission. He said, "We have become too predictable within our casual offerings and missed opportunities to create new trends." That's a strong statement, and it says a lot. To address the issue, Lululemon announced plans to ramp up new product releases. Right now, new styles make up about 23% of their lineup. They plan to increase that to 35% in the coming months. Of course, it's hard to prove a company has stale products, but the signs are there. And if customers are quietly turning to other brands, that's not something Lululemon can afford to ignore.
This last reason might be a bit of a stretch, but it's still worth mentioning. Lululemon has had its fair share of controversies over the years, and while the brand has stayed strong through most of them, these kinds of things can leave a mark,
especially when you're in the fashion business where public image matters. Even a name, Lululemon, has a strange origin. According to founder Chip Wilson, he chose it partly because it had several L's in it, thinking it would sound foreign and be hard for Japanese speakers to pronounce. That explanation has raised more than a few eyebrows. Back in 2007, the company claimed that one of its clothing lines, made with seaweed, had health benefits like reducing stress and detoxifying the skin. But when a New York Times tested the material, it found no trace of seaweed at all. In 2013, there was the infamous recall of yoga pants that turned out to be too sheer. That story got big, and when Wilson tried to explain it publicly, his comments came across as dismissive and even insulting. The backlash was so strong that he later apologized, but that apology also didn't go over well. Eventually, he stepped down from the board in 2018. There was also a CEO at the time who resigned without warning after having a relationship with a designer, something that went against company policy. None of these stories destroyed the brand, but they didn't help either. Lululemon might be in a stronger place today if those things had never happened. So what do you think? Are these recent setbacks just a bump in the road, or are they signs of something deeper that could keep dragging the company down? And if that's the case, what would it take to turn things around? Let me know in the comments. I'd love to hear what you think.